All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, today is Friday, the last Friday of the month of June. Today is the 27th of June, as we know, still 2025. And, well, what kind of a month we had, and oh my God, it was all over the place. But look, I did already talk about what happened this month in my morning webinar. You can watch the recording on YouTube. It's in there. It's in the live section. Yep, and you can have a look at there. Like I said, I already picked up on everything what's possible and how we could go further with all the tariffs and all that stuff. But what I wanted to pick up on in this video is actually the US PCE, which is coming out today. I'm recording this one, like I said, a few hours before. And but before we jump into all that action, let me quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm going to just wipe out my glasses very quickly. But yeah, the US PCE, I think, is going to be quite important to watch today, not only because it's one of the Fed's favorite inflation metrics, but also because the Fed is kind of currently, or should I say, Jerome Powell is currently coming under big scrutiny, and in terms of from the White House, as we know, because he's not lowering rates as he's pressured by the administration. So yeah, I mean, I think that the PCs are going to be very important today, because if those come out a little bit on the lower side, then well, this is, like I said, this is where the bombardment of accusations could happen once again. Also, before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, straight away into the economic calendar. Let's have a look. What are we expecting today? So, the core price index here, year on year, is expected to tick up by 0.1%. The headline number is expected to tick up by 0.2%. So the month-on-month figure remains the same on both sides, but let's have a look at the headline one, and let me just launch the chart. I want to see how it has been looking so far. We have been on a decline, and this is where the White House administration stands. I mean, they're kind of saying, oh, like, I mean, why the hell are we not cutting rates if the PCE continues to slide, the CPIs are on the lower side, and okay, I wouldn't say that the CPIs, for example, are sliding. What I would say is that they're kind of stabilized, and in a way, on the contrary, right now there's fear that we could see a push, in inflation back to the upside, and this is what the Fed is worried about, because again, they're more worried about the what's happening with the tariffs, and like I said, this is what I talked today in my morning webinar, the Markets Talk. So you can check it out in there. But briefly, just to mention something here, is that yes, the Fed is worried about the tariffs. However, as we know today, suddenly China and U.S. reached an agreement. I mean, not today, but like yesterday evening, they reached an agreement. I mean, it was such a big deal until we kind of got this deal. We were all, it's all over the news, and now suddenly it's just like, yeah, we reached a deal. Let's move on. Now the next step is Europe, right? So in a way, this is what probably the White House administration will try to kind of push, in a way that, look, we're reaching deals, there's nothing to worry about, the oil is drifting back down because we've managed to do a ceasefire between Iran and Israel, and that's why we are, there's no fear that because of oil, potentially inflation could go higher. So that's what I'm saying. So this is like where it's going to be an interesting one. If the PCE comes out on the lower side, let's say it comes out lower than the forecast, but the same as previous, then, like I said, the administration will start saying like, "Oh my God, look at me, look at this. I mean, the inflation is just at its lows. It's near your target. You know, the Fed's target 2%. So why the hell we need to keep the rates?" The same basically. Why we still need to take that wait and see approach. So, and this is where everybody now starts to speculate if during the July meeting we're going to get a cut, but at the moment we're only forecasting around 20% cut, 20% probability of a cut. So yeah, it's going to be very interesting when we're going to go into July on the 30th of July, and in general it will be interesting to see if before the end of July, will this shift a little bit more towards 50-50? And I'm going to make a bold call here, bold call. If we are, I think we're going to stabilize a little bit. I think that July could be a little bit of a problematic month in terms of trade deals. Again, I do understand that China and US has reached one, but there are other countries, and this is the thing where right now they're talking about the idea that they might extend the 90-day pause to maybe more, to a longer pause, because if what their justification is that if with some countries, with some regions, the talks are happening, and if there is progress, then let's give a little bit more time. My problem is like what I said this morning is that, well, you had 90 days. I mean, like honestly, you had 90 days, and everybody could have agreed if they wanted to. But if in general, if you want to, anything can happen. But anyway, so what I'm looking at here, and I think that what could happen here is that the dollar could remain under pressure, under selling pressure. In general, I'm a little bit more bearish on the US dollar right now, unless we get another conflict in somewhere where then the US dollar could take the role of a safe haven, as it did right here. Then yes, when we thought that there's going to be US involvement in Iran, there was, but again, I think it was like more of a you tickle me, I tickle you thing. But anyway, for now, like I said, I think that the US dollar could continue drifting lower. That's why they need a lower rate, because again, you need to make your exports a little bit more attractive for the global arena. You need to make US imports more expensive, so that so it wouldn't be it would be more expensive for the US companies to import from outside, and yeah. This is what, like I said, I think that this is what they're trying to do right now. They want to make the U.S. exports more attractive, and well, for that you need a lower U.S. dollar. That's where, like I said, the European Union is a little bit on the tricky side. However, look, everybody mainly exports into the U.S., right? Not a lot of goods are imported from the U.S. Well, I mean, we can debate all this. I mean, in terms of quality of the goods, it depends on the sectors, of course. But yeah, for now, I think that what they're trying to do is they're trying to drop the U.S. dollar. In my opinion, the U.S. dollar has potential to go all the way south here towards maybe the 95 zone, or maybe a little bit below that, basically towards this area right here, which was reached back in which is the lowest point of February, the lowest point of January of 2022. So we could go towards these areas. In general, looking at the psychological 90 zone, that's also something which is a perspective, which is a possibility. There we go. That's the word. Which is a possibility. So, but at first, let's not rush into things, okay? Because anything can happen. We can have like a geopolitical shock again somewhere, where then everybody shifts into safe havens. If the stock market, which is right now rallying like crazy, if the stock market continues to rally, then it's okay. That's great. The U.S. dollar could, like I said, drift further south. But if suddenly it reverses back down a little bit, maybe because if the market gets a little bit fearful in terms of what's going to happen with the tariffs and further tariffs, then yeah, then we could see a little bit of an increase in, like I said, in demand of safe havens, to which the U.S. dollar is as well. Where the US dollar is as well. And like I said, this could reverse back up. But even speaking from the technical perspective, I think I just need to see a push above this downside line taken from the highest point of February from 2025. If we can get a nice clearance of that one, I'll go to the upside. Very simple approach here on the US dollar, to be honest, but watching everything carefully, and like I said, watching that potential pressure, potential rate decision after the pressure of the White House on Jerome Powell. It's going to be quite interesting to see in July. Like I said, July I think could be a bit of a worry month for me in personally, but again, I might be wrong. However, at the moment, I'm not really trying to get over positive, because let's face it, this market understands that at the moment you cannot really plan too much ahead. Unfortunately, you can plan maybe like a week ahead or something like that, and then next every week some sort of crazy thing happens. So that's what I think the market is understand. This is what the market understands, and this is what we'll stick to for now, ladies and gentlemen. So keep your eyes on that PCE figure today. Like I said, if it comes out on the a little bit lower side here than the forecast, let's say it can come out the same as previous but lower than the forecast, then like I said, this is where the Jerome Powell attacks will resume, because as we know that the Fed right now is or should I say the White House is right now considering to change the head of the Fed. We'll see how that plays out. We'll see how the market actually reacts to this decision, because the market is at the moment is more in favor of the Fed. So because at least with the Fed you can find some sort of stability. Yes, they keep on saying we're going to remain data dependent, but still, it still has a little bit more clarity than the White House. Anyway, so keep your eyes on the two numbers and the year-on-year figures, and we will go from there. If we somehow jump above the forecasts, now that's where I think that this percentage here could drop a little bit lower. Again, let's see what's going to happen. Anyway, thank you very much, ladies and gentlemen. Hope you found it useful. Let me know in the comments what you think. What are your thoughts? And we'll go from there. Thank you very much, and I'll see you later. Bye-bye.